Hi everyone, good morning and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, what have we got? We've got all this safe haven trading flow that's coming through the markets. We're seeing treasury yields pushing to new lows, certainly 3-month lows on the 10-year. We're seeing the gold prices continue to push higher. We're seeing equity markets under pressure. This is all coming ahead of this week's key Fed meeting. We had a bit of dollar strength that sort of ended the week last week, a little bit off the top, but it'll be interesting to see how the dollar reacts on this Fed meeting, because this is the big one. This is the June meeting at which the market had originally thought, well, this is the time at which the Fed are likely to push for their second rate hike. Now, in light of the non-farm payrolls report that we had a couple of weeks ago, that now no longer seems to be the case. So how's the market going to react to the Fed? It's going to be sort of coming through with probably a bit of dollar weakness, because I think the Fed are going to have to pull back probably on the dot plots. They're currently sort of sitting at around about two hikes for 2016. Will that sort of be pulled back towards one rate hike in 2016? If that is the case, I think the dollar could weaken again. It'll be interesting to see how also the Fed and Yellen reacts through obviously the statement and obviously the press conference as well. So quite a lot of volatility that we could see on Thursday. But there's a lot of central banks reporting this week: BOJ, SNB, the Swiss National Bank, and also the Bank of England as well. So lots going on to drive Forex markets especially. But for now, we're seeing this safe haven flow flooding through the market. We've also got Brexit fears, which are continuing to ramp up. The polls, or the opinion polls, are getting incredibly tighter, and markets are now having to factor in the possibility of a Brexit. Really interesting. We're seeing sterling sold off enormously. We're seeing the FTSE 100 also coming under pressure. But there again, equity markets are under pressure generally because of this safe haven flow. So where are we sitting in terms of the Forex markets? Well, as I said, we had that slight amount of dollar strength pulling through the markets, and it's just beginning to sort of just settle a little bit. Markets are a bit unsure on Monday, but certainly we had that reaction lower on euro dollar. Big bearish engulfing candlestick pattern on Thursday last week sort of changed the outlook near term for euro dollar. But there is a strong amount of support between 111 and 112.15 for euro dollar. Now, in terms of cable, it broke a big support. 43.30 was the big May low. That was broken, and that changed the outlook considerably, because up until that point it was quite a choppy range play, but it's now significantly changed the outlook, looking bearish, and sterling is under a lot of pressure. It could be coming back towards the 140s now, and it'll be interesting to see how this one plays out, because at the moment we're seeing the Brexit trade really driving where cable is moving. So on the opinion polls, if they turn around a little bit, maybe we could see a bit of support coming through. But obviously we've got the Fed on Wednesday just to add to that whole volatility aspect of cable. Dollar yen, big safe haven flows coming into dollar yen, testing the 105.50 mark. If it breaks, that means 105.20. But to be honest, beyond that, there's not a huge amount of support until you get back to 101. So really interesting moves that we're seeing on dollar yen. So for the equity markets, well, again, we're seeing the safe haven flow. So what happens in that instance? You see equity markets coming under pressure. You're seeing not only that, the oil price, which had been supportive of equity markets, starting to correct a little bit. So you're seeing quite a lot of reasons why equity markets are selling off. The DAX down 6% in the week, FTSE down 4%. Both of which are testing key May lows. DAX has already broken through 9737. That happens on a closing basis. That reopens 9,500. FTSE 100, 6036 is the key level, and will it continue to break that to the downside? Now, this S&P 500 is a really interesting one, because it's only just started to correct back. And the support at 2,085 is a near-term pivot level. If that breaks, you're looking towards the big range lows, 2022. But for now, the S&P 500 continues to outperform, and really interestingly so. And for commodity markets, well, we're seeing the gold price, as I said, pulling strongly high. It's running from around about that 1,200 mark up to 1,280 in the space of just about a week and a half, 2 weeks. So really strong moves we're seeing on the gold price. Will it continue? Well, it's now into a big congestion of resistance now. The Fed monetary policy has a big impact on the gold price, and I think that will remain the case. It is a big volatility driver, and if the Fed comes out with a dovish comment or dovish shift in the dot plots, could we see it break through the 1303 mark? That would be the key resistance and a big high that would be coming up soon. But for the meantime, 1288 is the initial resistance for gold to test. Oil price started to come down a bit, as I said, starting to see more of a corrective move, and that is coming as these treasury yields continue to break lower, and that is sort of questioning this whole aspect of growth. We had the Chinese data out over the weekend. Is the industrial production number 6%? Again, on the industrial production, is that just being sort of propped up by government spending? Retail sales a little bit less than expected as well. So the Chinese data has done nothing really to help the risk appetite on Monday. So what are we looking for the rest of the week? Well, we've got a little bit of an inflation theme, bit of a monetary policy theme really. We've got starting out for the UK inflation on Tuesday, and a little bit of US retail sales on Tuesday. That's the last real bit of data in front of the Fed monetary policy. But again, then on Wednesday, we've got UK earnings in the unemployment report. UK earnings set to stay around about 2.1%. No real sign of earnings picking up, or earnings growth picking up, I should say. But then we're looking out for the Fed. We're looking out for the Bank of Japan. Bank of Japan on Thursday. Not really expected to move on rates, although inflation has started to pull lower. And it'll be interesting to see if the strength of the yen will produce some sort of policy shift. Not expected, but it'll be interesting to see if it does happen or not, or alluded to in the statement anyway. And the SNB and the Bank of England are also not expected to move on rates either. So quite a lot going on, and finishing off pretty much Thursday with the US inflation CPI data, but I think that the market will still be reacting to the Fed at that stage, and it'll be interesting to see if the inflation just sort of moves the market around. But still, I think the Fed will be the driver. So I wish you good luck in all your trading this week, and I will speak to you soon. Thank you.